What other myths do we have about banking? Oh man, I could talk all day about this. We've done secured lines of credit. We talk about building your credit up. We talked about all that. Always keep more than one bank account. Never just have one bank account. Always have more than one bank account. And make sure your banking is doing minimum fees. If you need a list of banks that you can talk to, credit unions are excellent. Community banks are excellent. Some questions you should be asking: do you have minimum fees? There are banks out there right now with even no overdraft fees. Imagine that, no overdraft fees. You want banks that really care about you. So banks that reimburse your ATM fees. Not the cost of the machine you're using, but usually they charge you whatever. You have banks that if you gotta go out of network, they'll pay you back for the machines that you use. You know, Barclays is an excellent bank. It's an online bank. A lot of these online banks. Capital One now has a great bank, has a great checking account. You know, Make sure that they're not lending money like they used to. So that's the better. As far as just keeping your money in there, they're not bad. You want to deal with smaller banks that appreciate your business, that you can call up and get things done. Like literally, my bank, if I'm running late, I can make a phone call, get stuff done. If I have an issue, I need a check cleared, clear it that date. These are things that affect your business and affect your personal life. If I need a loan, I say, hey, I need to borrow $5,000, $10,000. Doesn't necessarily matter for what. I got good credit. Like, they're always gonna ask for it, for what? But at the end of the day, if you don't, no, you don't meet this, you don't meet that. Um, Even at times when my credit was not so good, I need to borrow money. I need you to be able to work with me. You know, if I write a check and there's not enough money in there, I get a courtesy phone call before I get charged. Hey, do you want us to clear this check for you, or do you want us to reject it? Well, we're just giving you a courtesy call either way. Don't worry about it. We're not gonna charge you any fees. It may hit, but I can go in there and get it erased. You dealing with a banker. The people you talk to, they don't even got the power to take off a fee. At least not multiple. They can take off one or two. Why am I telling you this? Because it's important. Because the Chases, the Bank of Americas, they're not making their money on loans anymore. They're making their money on fees from the middle class that are getting chewed up, and they thinking that it's just normal. That they're the ones that are going through stuff, or they're the ones that can't get their stuff together, so they eat up bank fees. I used to have bank accounts like that. Then I learned my lesson. It wasn't until I did my tax and I looked up, I said, oh man, I got all these bank fees. I looked how much money I was losing every year. Like, these are things that you're gonna need to do to help yourself out. When you grow a business or you look into being real estate, you're gonna need a banking partner if you're taking it to the next level. So you want to get good relationships, um, banks that really are gonna help your business grow. Because if you're not, I'm helping your business grow. But if you're not willing to help my business grow, why are we having a conversation? Why am I giving you my business if you can't help my business grow? Most of you guys, you got your direct deposit. The bank is taking every last drop of your money, and because of that, they'll waive your fee. Or if you give us 5 charges, they'll quote unquote waive your fee. Just some food for thought. I had something else I was gonna say. I think I forgot. Let's take a greater analysis here of the products that are kind of unleashed, and let's further examine how banks are structured and set up. If you notice, banks don't want to part with cash. Why don't banks want to part with cash? Because if they have to part with cash, that means that they can't loan on that money. If I go to a bank and I pull out $900 in cash, I can no longer, or $1,000 in cash, that's $900 less that I can lend out. So banks, if you notice, the psychology behind all the technology is that we don't want want you to be able to. We don't want you to have to take money out the bank. They charge you to pull money out of another ATM, but they don't charge you to swipe your debit card. You can no longer deposit cash in the bank, meaning that they don't want you pulling it from one bank and putting it into another bank. They'd rather you cut a check from bank to bank, right? So all the money stays with the bank. Automatic payments. It goes from one bank account to another bank account. Nobody pulls out the cash. So the more they have in reserve, the more that they have to. And let me even put it better. It's no longer just loaning money. It's also investing money. Essentially, what the bank is doing, right? So they're taking your money. They're able, which is a beautiful concept, right? They basically have 90% leverage on everything. Well, that's another story. So I put in $1,000 in the bank account. They can loan $900 out on that money. So what does that loan, that $900 loan, represent to a bank? Starts with an I. You got it. An investment. Yes. So they're borrowing your money, and they're making this thing up where, okay, now we borrow money, now we can take that money, and now we can loan money based upon that.